Hello, everyone, and welcome to this new episode of FinTechVerse, which is FinBox's series of webinars. I am your host, Anant Deshpande. I am one of the co-founders of FinBox, and FinBox, of course, is India's leading credit intelligence and infrastructure company. Today's topic is very interesting. This is about building successful BNPL products that are data backed and using cutting edge credit intelligence. Um, Talking about successful businesses, I have today with me a special guest. His name is Vikas. He's the co founder and CEO of PayTail. And let's dive right into the conversation. So, Vikas, welcome to the webinar.
Thanks a lot, and thanks for having me here. I love what you guys are building at FinBox.
Thank you so much, Vikas. It'd be great for our viewers to, get to know you a bit and maybe the story behind making of PayTail.
Oh, yeah, I would love to. Let me probably, the story actually goes back to my childhood days. I grew up in a small middle class family in a tier 3 city. My father used to run a small B2B business. Um, and during those days, working capital always was a challenge. And my father would actually spend a considerable amount of time to really solve it. And a large reason was that back in the days, the only option which was available to you were the public sector banks, right? So
Right.
when I was growing up, I saw all of these challenges as a first-hand experience. So fast forward, I went to college, did my MBA, and picked up this problem statement to really solve. Landed up in the banking world, IDBI, corporate banking, coveted career, super thrilled about it. And the next couple of years were the foundational years and super full of learning of how banking as an industry works. Um, and before moving on to IndusInd Bank, where I would spend in the same industry, where I would spend the next 9-10 years solving for the working capital issues of the small businesses. And it was in my last assignment, which was C2FO, which is a US-based fintech company where I was leading the capital finance in India, that the idea about PayTail started, where PayTail actually took birth. Because I was researching on all the incremental complementary products that we can have in our business at C2FO, which can actually act as a future growth driver. And the core part of the research was the small retailers. And these small retailers are the ones which are anyways existing in the large corporate network, a network that we had built fairly large and big. So very quick learnings and very crystal sharp learnings. Um, would it be fair to say that every single small or large business out there, a universal problem statement to solve would be that everyone wants to increase their business, increase the growth rate, right?
Right.
Now, working capital always has been a large part of it. But let's look at it like this. If a business has a 100 rupees turnover and the working capital requirement is 30 rupees, if you give the guy 60 bucks, is it really going to increase the business in the same proportion? The answer is no. It's only going to add into the debt burden. So what is it that you incrementally need to do to get there? You need tools. You need growth tools, growth hacks, which could act as a lever for a small business, not only to convert a new client, but also to retain them, to cross sell, to upsell. Looking at the e-com industry, I think one of few of the very crystal clear learnings for the small businesses that they can do is the entire tools that these e-coms have at their disposal, and affordability is at the top of it.
Mhm.
So, very large market. When we were looking at the space, we thought if no one is really solving this problem, let us pick it up to really get there and add value in the entire ecosystem. So at PayTail now, what we are building a layer of credit and convenience for all the retail buyers who are walking into the store of all of these partner merchants with an intention to buy the product. We give him affordability and let them buy the product and pay in EMIs. For the merchant, it actually acts as a great tool for them to be able to convert the customers.
Wow.
Yeah.
Wow, that's one hell of a story. I believe, having an upbringing which is in tier two or tier three towns actually gives you, a very close look at the real problems that need to be solved. I think every business today is catering to the niche tier one segment, which is actually a very small part of the overall addressable market. So kudos to you for taking up this mantle to solve for Bharat as well as for India, I believe. Um, the other bit is, of course, that just today I've read that consumer durable market in FY22 was about $5 billion, and in fact growing in the past 3 years at a CAGR of around 70%.
Yeah.
Um, Tell us something. How big is PayTail currently, and what do you see as the opportunity in the coming years for your business?
When I talk about this segment, $5 billion is exactly the assets under management
Right.
across all the banks and BFCs. But if you really look at the amount of funds which is going into the category, that volume itself is about $11 billion, and largely dominated by traditional large lenders into that. But that's the market which is already addressed. And like you rightly said, predominantly in the tier one cities, and especially in the large format retail stores, where all the solutions have been present for almost the last 5 6 years and well catered. The actual opportunity is actually about 5 to 6x larger.
Wow.
Yes, because uh, in smaller towns, the small merchants, which still contribute to about 85%, whooping 85% of India's retail. That's the contribution coming in from a small merchant, from Bharat actually.
Right.
Those are the guys who are either underserved in some of the geographies. Like pick up my hometown, Patiala, underserved. But if you go to some of the even deeper geos in the north and eastern states, in some of the southern states, uh, you will find that at a category specific level, at a size level, the merchant network is completely unpenetrated. They do not even have access to these solutions, and the consumers who are walking into their counter, they're completely devoid of that, right? So that is where PayTail's entire story and PayTail's platform fits in beautifully, because we are a totally digital platform, DIY. We will get the onboard the merchants, onboard the consumers in a totally digital DIY process. We get to create a very large distribution network,
Mhm.
right? And once you are there on the local in the local market, that's when you are actually generating incremental transaction, which earlier was not happening in the in the consumer finance space, as well as also you're unlocking some bit of efficiencies, and you're bringing new efficiencies on the table. So we
Right.
clearly see that the market from here, 70% CAGR, I think it's actually going to need a little bit more than that to really reach to its full potential.
That's very nice. And in fact, FinBox also started from this thought that uh, there's a very small percentage of credit eligible population that is today getting served,
So true.
and we thought that we've to do something about building these products and tools that could help lenders to take lending to all maybe 19-20,000 pin codes of India, whereas as of today it's at less than 50%. um, you've been uh, tell me something that what are the key underlying factors for the success of your business, for lending business in general, but maybe for PayTail, what are the key pillars on which your business uh, you know has a mainstay of your business?
Yeah, well, Anant, very interesting and main question, right? From my angle, the way I look at things, I think in any lending company, in any lending ecosystem, there are three broad levers that one needs to solve for. The first lever is the GTM, or the entire go-to-market strategy that you have. Then is credit, second, and third one is of course collections. And each of these levers are extremely important in itself. So let's look at the first lever, right? GTM, or we call it the distribution. If you look at our country, and the history of it, there have been many successful multi-billion dollar businesses which have been built just by solving the GTM, right? And there are a lot of names out there. So if we really try to learn from them, that what have been the success stories and how they got there, I think broadly I understood three things. Number one, uh, clear articulation and identification of your user group, that which is the user group that you're targeting, and I'll also tell you how we are doing it in PayTail. The second piece is important piece, that how do you reach to this user group in the most optimized costs which is possible. And third is that is your GTM future ready and quickly scalable. These are the three large important components when we talk about GTM. On our side, for instance, um, our entire GTM starts from acquiring a large enterprise client, right? And each of these enterprise clients, they've got hundreds and thousands of small retailers which have been existing in their network.
These
So
could
once we
be OEMs.
these could be large OEMs, right? So think about Voltas, Blue Star,
Right.
and those are there in the consumer durable segment. Then we today own about 70% of the bicycle space. We've done some massively amazing work there, and these are some of the categories which have traditionally never been activated for a consumer finance product when you're buying that. Um, so we go to these enterprise clients. When we sign them up, each of these guys would actually have hundreds and thousands of merchants in their network, a very small portion of which today would actually be catered for this solution. Uh, our product is totally digital DIY. When we tie up, we give access to our application to all of these partner merchants. They download the application, register themselves, and also at the same time act as a gateway for us to acquire the consumers.
Right.
So three things which I just spoke about. Uh, the audience is crystal clear defined. This is a merchant sitting in a tier 2, tier 3 city. Uh, 99% of them are actually single store owners,
Right.
and selling discretionary category products. So it's a super well defined user group that we are targeting. The ability to reach at these guys with the lowest possible CAC is inherent in the entire GTM. And because we are talking about a market which has millions of those users,
Right.
it also has the scalability element to it.
Right.
And at large, if you ask me, especially in a credit ecosystem, I'm not in a favor of some of the GTMs which are largely dependent on the digital spends, right? Because if you dig deeper and look closely, the entire CAC becomes so high that the lifetime value of the user itself stops making sense beyond a point, right? So that is where you really need to craft your GTM strategy so carefully when you're setting up the business for it to be scalable.
Right.
The second important piece, of course, is credit. Um, Credit may look
Just to be sure,
Sure.
your the merchants, for example, a merchant having a bicycle shop today can install your app, PayTail app, and get onboarded onto your app, and then they can start financing some of the purchases of their customers using PayTail.
Oh well, yes.
Wow.
So when we sign up the corporate, we get the access to the entire SKU data,
Mhm.
whatever products corporates are selling through the
Right.
merchant counter.
Right.
The only thing that the merchant has to do is download the application, enter some of the basic details, and in less than 60 seconds,
Mhm.
through a DIY journey, the guy goes live, and we give them a QR code in 60 seconds, and from 61st second, whatever buyer is entering into the counter, they can start actively pitching in the consumer finance as a product.
Wow,
Right?
that's a
Convert that.
great merchant acquisition strategy that you've put in. And tell me something. I've always heard that adding financing option to any kind of a transaction supercharges those transactions. So what could a merchant expect in terms of their sales being increasing, getting increased, or how much would that be? What would it be worth for a merchant to add financing?
So, well, I'll give you an interesting data point, which comes more often from our network.
Mhm.
When you go and speak with a merchant, anecdotally is going to tell you that out of 100 customers walking into my doorsteps, I am naturally able to convert 25, 30 of them. So the actual conversion percentage without this product is about 30% at a
Right.
merchant counter. Now, question becomes, where are the 70 consumers going? They fall out predominantly because of two reasons. Number one is the distribution, the brand, the SKU, the color, the model, whatever the consumer wants, it's not available at the merchant counter. And the second reason is the affordability factor. That
Right.
they would like to wait for the salary to get credit in the next month, or the bonus to come in before they really go for that big spend, right?
Right.
When you plug the affordability solution, which is instant, less than 60 seconds at the merchant counter, then it suddenly becomes exciting for the consumer. And the impact that it can end up creating, out of 70, if you're able to convert 15, just 15 users for the merchant,
Right.
that's a 50% bump up in the overall volume that you're talking about. And imagine if this becomes so prevalent, the impact that it can lead into the corporate supply chain as well as economy in general, right? That's exactly what the power of these small merchants we're talking about.
Wow, that's huge. And I'm sure there's all of these, quick decision making that, PayTail does on each of these merchant stores has a lot of, underlying sophisticated, decisioning systems, and perhaps a use of a lot of data and insights about the borrowers. Uh, you've also been using FinBox's Device Connect product as one of your tools to help underwrite borrowers. Could you talk a bit about what Device Connect gives you, that and help how it helps you to
Sure.
supercharge your business?
First of all, I don't know about the credit model being sophisticated or not. I think I think credit as a journey is always something which you cannot claim that I've seen it all, done it all.
Mhm.
It's always a evolutionary cycle full of learnings that everyone, and it's true for both the digital lenders as well as the largest of the largest traditional lenders out there. So it's your own playbook that you will keep on perfecting, keep on reinventing over time as we move along. So yes, so we've been using FinBox, and let me give it to you that right. So uh, while we were trying out the product, um, I could never imagine that as against a traditional bureau-based underwriting and whatever you can build based on some of the alternate data, a well-crafted device model, the kind of power that it would potentially have. And we have both seen those results in the portfolio as well, that it has certainly added a great value. I believe that for a credit engine to work at scale, it actually has to draw the best from both the worlds. The first world, of course, is the conventional wisdom world, because that conventional wisdom has also come because of a reason.
Right.
At scale, when you're running, a lakh crore book, you've seen the industry cycles, and that's how that conventional wisdom got developed. So, I mean, of course, there is no possibility that you completely junk it.
Right.
But what really happens is that when you combine that with the new age data-based underwriting models, and you combine that with multiple sources of the data, like the area where FinBox is also helping us out, then the entire conventional wisdom can actually prove to be even more powerful,
Right.
right? So in my personal view, this is a secret sauce, and a fine balance that you will actually have to draw to really have a successful credit model.
Yep, yep. That way we help lenders build their
I'm sure. I'm
secret
sure.
sources in a much deeper and sharper way, and we take pride in being able to help lenders to create some game changing values in their businesses. I think even we've been very sure, and in my past experience in the area of lending as well, that building an alternative data based credit scoring models, and as you rightly mentioned, merging it with well crafted traditional credit bureau banking based underwriting models can create results that are far superior than what just the traditional underwriting models can
Yep,
create.
for sure, for
and
sure.
and we've seen those incremental values to be not incremental in terms of 5-10% relatively, but game changing nature, like 50% or even 100%. And this is of course as time passes, as you mentioned, as these models evolve, these keep getting better.
Yeah.
And give you results in years time, that way.
Well, Anand, let me tell you this. The only way it's gonna evolve, if you just keep reminding yourself, you're just getting started. Right?
That is so true.
That's when it evolves.
That is so true.
Yeah.
Um, would you, where all, in your opinion, these newer data points that we get, for example, alternative data that we've spoken about, which is, anonymized smartphone data points about, a borrower's spending habits, behaviors on, interaction with various businesses, and combined with banking and bureau insights. Which all areas of your business do you feel that these are important to be leveraged to make a difference?
Well, all the answer is so simple. Every single data point that you can gather. Let me tell you this, right? In the entire lending as a segment, like I was previously telling you, people are playing on their own strengths. And what is the strength of a fintech company? To gather this data and to make sense of this data, right?
Right.
So each and every data source, whether it is directly coming in from the user, which is device, or it is coming in from a traditional bureau, or with some of the newer frameworks like an account aggregator, or some of the public utilities, right? All of these data points are super important. And the reason I say this, um, your credit model is actually going to be always evolving,
Right.
right? So there would be probably a bunch of variables which will prove to be far more significantly correlated in predicting the probability of default today point in time. But would it be fair to say that there's a high chance that if you look at the same model 3 quarters, 4 quarters down the line, you will actually end up adding more variables, right? In the same decisioning model. So from that angle, all of the data points that you gather today, irrespective of the fact that is your decision making process based on that or not, are still important.
Right.
Because they may start predicting something in the future.
True, true.
Yeah.
And I must ask you and kind of get your opinion on this. All the, among the viewers, people owning lending businesses, credit managers, CXOs of lending businesses, what might they be missing out on when they do not, use or, leverage alternative data solutions like the one that you've used FinBox for?
Well, if you really want to solve for speed as well as the entire experience that you're delivering to the end user uh, while putting them through an underwriting process, and if you're not relying on the alternate data, I think scale is something which is you're gonna definitely miss, right? Because then you will still be stuck in the entire hamster wheel of having to draw a greater comfort of a touch and feel, look and feel of the user, where the credit manager would be required, and a lot of people are actually going to be required to run the show. So scale is certainly first factor which they're going to miss on. The second piece, I would say that given the same user audience, uh, within that the approval ratios and the quality of the users that you end up approving, and thereby the eventual impact on your portfolio, and those are all the other components that will definitely gonna be hugely impacted if one is not looking at the alternate data. And now I can of course tell you with some bit of experience, given the network that we have created, that how these alternate variables have turned out to be so fruitful in the decision making process.
Right. So thereby, alternative data based or helped strategies will help you or a lending business expand the size of the business at a faster rate and with more confidence, as well as give you a granular control over the quality of your portfolio
Yes,
as
yes,
well.
yes.
Interesting. So I hope the viewers are listening to you intently, and they take cues from your thoughts. Generally, on the landscape, I think recently there's also account aggregator framework that has come to the fore and is gaining traction. What is your view on account aggregator, and how do you see yourself leveraging this framework in the future?
So account aggregator is, of course, one of the most powerful thing, right? If I just have to take a macro view on things,
Sure.
um, I'd put it like this: the entire lending ecosystem is actually going through a mega shift. If you look around, what's happening? Recently, there have been DLG guidelines issued by the regulator, and many changes proposed in those guidelines.
Right.
But what really makes me happy, uh, perhaps this is the first time in the entire history so far that fintech as an ecosystem has actually been formally recognized by the lender.
Right.
And there is a serious thought process going on
Mhm.
that how do we really manage this buzzing ecosystem of digital lenders and really build along with them the entire future.
Right.
Right, that's one part, very important part.
Mhm.
And the second important part is that um, there's been a constant government push and thought process in India becoming a data rich country
Right.
in comparison to a data scarce country that we have always been, right?
Yes.
So account aggregator and some of these frameworks certainly help in that direction.
Yep.
And both for the digital lenders and the traditional lenders put
Mhm.
together, if we if we really think about a 10 years roadmap from here,
Mhm.
and you see that where that road is going, I see that road converging, right? Long term in the future, 5 years, 7 years down the line, 10 years down the line, digital is the only way when you
Right.
talk about the lending ecosystem,
Right.
right?
Right.
Especially in retail.
Yep.
There is not going to be an option not to go digital.
Mhm.
And all of these things which are happening in the country right now are just preparing everyone to get smarter on relying on the data points, consuming the data points, as well as making sense of those data points. These are all efficiencies which are getting created.
That is so true,
Yeah.
and I think you're right in saying that government's push has been on digitization, not
Yeah.
not recently, but since a long time, and I think the plans are to be able to leverage all this digital footprint in order to deepen financial inclusion, deepen the delivery of various financial services to the grassroots of the
Yeah.
country. And I think we at FinBox are also a fan of how RBI has operated, and how it has clarified the roadmap for fintechs to operate and thrive in India. I think we are certain that if we can keep our focus on protecting the end consumer, and innovating within the boundaries, let's say, that are continuously being set by the RBI, we are in for a great development in this area, and we'll continue to be as a country number one in the area of fintech. um, uh, the Maybe we're heading towards the end of our segment. I think one interesting question that we have is, and that everyone would like to understand, is what are the types of partnerships that drive your business, and how do you, let's say, put or make time and allocate your mental bandwidth towards all of these.
Yeah, interesting. So when it comes to the partnerships, I think the first partnership that we have is the enterprise clients, right? And we have a separate team for that, which we call as enterprise sales team. And within that, we are very category focused and specific.
Right.
And the way we are picking up those partnerships, each of these guys are very sizable in their nature. Because if you really want to create a scalable business, then the first part of the GTM
Right.
itself has to be operating at scale,
True.
right? So consumer durable, mobile, tires,
Mhm.
bicycles, inverters, right? Some
Yeah.
of the newer segments,
Right.
like you've never heard about affordability being offered
Mhm.
on as simple a product when you're buying an inverter battery, which is going to cost you 20 grand.
Right.
Right? So enabling some of these categories as well. So that's the first partnership, which acts as actually on the demand side.
Mhm.
Then we have partnerships on the supply side of the capital as well, where again the thesis is that let's just go out there and work along with the major players existing in our country. So we have Chola, we have ICICI, we have HDB, and a couple more
Wow.
in that direction. All of
These are
these are
huge
again
names.
huge names. All are huge names, and just I'm just keeping my fingers crossed. In this month alone, we may just end up announcing two more very large and sizable partnerships
Wow, more
on
power
the
to
supply
you.
side. Yeah, thank you. And third, of course, is that what we are doing in terms of running the business operations, and that is where data partnerships play a very critical role.
Mhm.
Um, Along with whatever we are already getting from the user,
Right.
from the bureaus,
Right.
there are few more partnerships that we have, right?
Mhm.
So let's say if you want to really check a crime record,
Mhm.
the past record of a user who's walking in,
Right.
there's a partnership in that direction. Now, whenever is someone declaring the address
Mhm.
wherever they're staying, so there is already a partnership which is going on to really make sense of that local geo,
Right.
right? So when you have that kind of intel,
Mhm.
that will not only allow you to scale, but will allow you to scale better,
True.
right?
Yep. Yep. Yep.
So this is largely the partnership ecosystem that we have.
Wow,
That
that's so glad to know. I think you'd be glad to know that FinBox just yesterday also became a specified user, which gives now FinBox a greater and easier access to credit bureau information for in order to process it for our lender partners such as yourselves and give you more value of out of the data that we collect as your
good to hear
partner.
that. Like I said, you guys are doing an amazing job.
Thank you so much. And of course, apart from that, AA partnerships are something that we already have, and hopefully we'll bring some of the products built on top of this, AA rails to you very soon. And hopefully, with this combination of alternative, traditional, and all other regulated, regulatorily available data points, we'd be able to create much more value for you in the coming days and months.
Looking forward, man.
Cool. Well, Vikas, thank you so much for being a great guest for us and sharing with us all these, deep insights about the consumer durable market, but also very interesting, the business model that you've been able to build and scale. Well, what could we say? More power to you. We look forward to you, scaling um, massively in the coming months, and we look forward to collaborating with you deeply and creating more value for you and your business.
Thanks, Anant. Thanks, Anant.
Cool.
I
Thank you
really
so
enjoyed
much.
my conversation with you. Thank you.
Yes, pleasure.
Thank you.